Okay, let's get to our next story, which is the Volcker Rule. We're still talking about it 1.5 million years later. So this is part of the revamped Volcker Rule that is now running into some problems.
Exactly. And now you have every agency weighing in, most recently the CFTC. And so now you have a Democratic commissioner coming out and saying that these rules are not enforceable. And so the rules are very hard to understand, but they're also, a lot of the Democrats, a lot of critics say that the rules are just too loose for the banks and opens a lot of room for speculative trading once again.
Why are we still talking about the Volcker Rule?
Why? Because a lot of people don't want it.
Banks
The banks don't want it, do
aren't they fine?
The banks are fine, but they want to free up capital. And I think this is what this is attempting to achieve, if I read it correctly, not having really studied it. But I think that's the idea, of freeing up more capital, and therefore banks can make more money.
But on the flip side, then you have some analysts over in Europe talking about Basel IV and how that's really going to disadvantage European banks, so then they can't buy back stock. But that's not the problem with European banks, is buybacks.
Well, truly, you were saying, why are we still talking about Volcker? Something that amazes me is the fact that since the crisis, the U.S. banks have just done so much better because of the different regulatory environment. And all of a sudden, we're in the spot again where the U.S. is getting lighter and Europe is getting tighter.
Yeah.
And so you see divergence once again.
Well, I think that's true. But I think the other reason is, the European banks haven't really cleaned up their problems properly.
Right.
We haven't had that recapitalisation. They're very different. If you look at the chart of European banks, they're just bouncing off their sort of 40-year lows.